What's going on, everybody? Jeff here. Welcome back to the channel. Big pull in the market today, actually breaking back down to that same channel that we've been range bound for quite some time, in between 394 to 400. In this video, I want to talk about the next 2 weeks. All right, we have the Fed blackout period, which has begun, which means there's going to be no Fed members speaking. The media or investors are not able to really get a close ear to where the Fed officials are swaying when it comes to the FOMC meeting, all right, happening in next week. I want to talk about some technical levels as well. I mentioned in last video when I was talking pretty specifically about AMC that I was going to make a video talking about this. Going to give you a big picture overview, okay? So let's get right into it. First off, today was a simple pull. We actually entered back into that range of that 394 to 400. I'll zoom out just a little bit for you guys. We mentioned this range for quite some time. We broke to the upside, came off of this trend line. Okay, now we're back into that range. I don't think we're going to break either direction very easily. Now, this trend line we've talked about for a little bit now. This goes all the way back to January, and it seems like everybody's eyes are on this trend line. All right, that they've been bullish for quite some time. You hear some people on Twitter even saying, listen, the bottom is in. We're gonna continue to move the upside. You've also got other people saying this trend line is just too easy to be able to short and bring it back to the downside. Let me tell you this twofold. One, after this is the fourth time approaching this trend line. Now, every single time we approach a certain level, whether it's support or resistance, the chance of that breaking gets greater and greater, okay? Especially because we are in a bear market and this is just still a bear market rally until it's not. It would be very common for market makers, okay, kind of take this just a little bit higher than this trend line. All right, kind of, get everybody start to get in that greedy aspect again, only to rip it back to the downside, fake breakout. It's been very, very common, especially on smaller time frames, okay? So keep that in mind. Also, we got that 400 psych level we broke through. Like I said, it's a very short time frame when you're looking at on an intraday. We're going to see if that holds going through. But on a larger time frame, it's going to take a lot of effort to break this to the upside, but also it's going to take a lot of effort to break this down below that 390 level, okay? We have a lot of support, coming back into this range. As you can see, a lot of demand all the way down through this area. All right, so just over the next 2 weeks, a couple things I expect to happen. Okay, first thing is going to be a little bit of that lower volume range bound. All right, there's really nobody, bears or bulls are not as of yet really stepping in to try to take control. They're kind of just fighting to keep this really pinned in that same area until they can get a little bit better of direction. Now, when you look at the economic calendar for this week, I already mentioned it's a Fed blackout period. All right, we had, the ISM non-manufacturing PMI come out at 10 o'clock this morning, which we did see a little bit of a pull. Other than that, we don't have anything too crazy until we get to Friday. We have the PPI, which is the producer price index. Basically, it's just how much of inflation costs have already been passed off to consumers and what hasn't been as of yet. Wholesale inventories will play a little bit of role in that as well as Michigan consumer sentiment coming out at 10 a.m. Other than that, it's a pretty light week when it comes for data, okay? So where can we look for things to turn? One, like I said, that 390 level really needs to break, also hold that retest in order to get that continuation move to the downside. Do I think that we have hit bottom? Here's kind of a bigger picture of what I want to talk about. So first of all, we've been in a bear market. Technically, a bear market begins once we have a 20% drawdown from the high, dating all the way back to January. However, the way that they rate the time frame on it is that we've been in a bear market all the way going back to the high of January. Bear markets normally last, say, around 9 months and so forth. Right here, 289 days and so forth. Here's when a bear market ends: when we have reached 20% from the bottom. All right, so let's just zoom out a little bit right here and give kind of just a little bit of a perception on where that would be right now. So if we line this up with 348.11, which is the bottom on SPY as of right now, we go up to where we hit on a high. Okay, we are sitting at a gain of 17, let me go a little bit higher, 17.8%. Okay, so now if we get up to 20%, okay, now don't get me wrong, guys, this is all technically speaking, just like technically speaking, okay, two drawdowns, negative quarters of GDP is classified as a recession. All right, we're still talking technically here. This can always get changed, but technically speaking, as of now, 20% move from the bottom would indicate another bull market. So if SPY gets to, all right, that 417 and a half area, okay, which is where we've hit the high of about that 410. All right, maybe after hours pre-market we got a little bit higher. Like I said, this is the daily. We get to that 417 and a half area. That would technically indicate the start of another bull market, right? That, and generally there's a lot of things that happen, okay, in bear markets that have not occurred of yet. One very commonly known, all right, obviously VIX, hasn't spiked over 45, which, those eras, those consistencies, eventually they're going to come to end. Everything's not always going to be 100%, but bonds haven't started to turn up yet. Your small caps and your value companies haven't even started to peak yet. Your high growth hasn't started to peak yet. The macro hasn't changed, meaning a lot of people are banking on this Fed pivot. Well, there's three parts to this Fed pivot. The first one is going to be the slowing of rates. The second one is going to be the stopping of actually raising rates, okay, and the maintaining. And then the third one is going to be when they actually start to pull back on the rates. And the ironic thing is, right now, every single time we hear about the slowing of rates, all right, the trying to time when the Fed is going to pivot, the market rallies. If they like what they hear, the market rallies. But history, okay, going back and taking a look at history, has shown us that every single time the actual Fed starts to pivot is when we get that final drawdown, okay? And that the market actually doesn't bottom until after the Fed has already made their third stage, okay, of their official pivot, which if you think about that, we're going all the way back to potentially somewhere maybe, middle to third quarter of October, once the housing market starts to pull a little bit more, okay, once they can try to get some of their balance sheet, because in order to lower interest rates, they actually have to be able to have some funds and liquidity to be able to do so, okay, which they got to pay off some of that debt first. So there's a big picture, aspect to this of do the macros environments, what I mean, take a look at where the economy is. Does it warrant, all right, another bull market? If we see headlines, we're in a bull market. Does everything, that besides just the technical aspects of what drives the market, does that warrant another bull market run? Kind of makes you wonder exactly where we're at. So personally, I don't think the blood has ended as of yet. I do think we'll ping pong, we'll range bound, okay, for quite some time. Like I said, 13th we've got CPI, 14th we've got FOMC. We're also in December, which historically speaking is a Santa rally. Kind of wait until the beginning of next year. A lot to go on, and think about over the next couple of weeks. So I hope this gives you a little bit of a picture, and just know, like I said, if you are still, like I am playing intraday, I've kind of slowed down just a little bit, all right, off the gas, playing a little bit smaller position size. Okay, like I said, earlier today, that 405 reject that I said to everybody inside, was beautiful, offered great risk reward. The risk reward late